What's good, traders? Welcome to another episode on the trades we missed last week. So moving on, for our first trade last month we had a bullish trade, and this bullish trade is coming from this fair value gap here. So we can see a fair value gap here and an obvious one here. So we extend our shape to this angle to see if price is going to tap into it and give us what a newly formed fair value gap and a break of structure. Now we can see a break of market structure here, and prior to that we have a newly formed fair value gap here. Let me show you guys. So we have our fair value gap here, the fair value gap here. So we highlight it like so to the end and wait for market to come to tap into that fair value gap to give us our entry. So this is how we put our entry for our long position here at the start of this fair value gap here. So we never can tell when price is going to tap into this area to give us our entry, but we just have to be patient for it. So our bullish trade would most likely end here to give us a 2.53 risk to reward ratio because of this newly formed, or our past fair value, because of this fair value gap here. So looking at this fair value gap, there is a high chance that price will tap into this fair value gap, respect it, and bounce away from it. We have a 2.53 risk to reward ratio. The next is trade number 2, and let's move further to the right hand side so we can look for our trade number 2. Now this is our trade number 2, and our trade number 2 happened to be on Tuesday. So we have a bullish trade also here. You can see there is a fair value gap here that price just tapped into. You can see it here. Price tapped into this fair value gap here, and you can see it on our 3 minutes time frame here. So after price tapped into this fair value gap, we have for us a fair value gap and a break of market structure here. So we have a break of market structure here, and coming back we expect price to tap into this newly formed fair value gap to give us an entry. So we have a space here, and we just highlight it and wait for price to tap into that fair value gap and bounces off from it. So we have our bullish trade like so. The next thing is to look for where price might rally to and stop. So we have a bullish trade, and you can see how price can just go all the way to this top here or this spot here. So we can use this fair value gap as our take profits. So we can use this fair value gap here, giving us a 6.33 risk to reward ratio like so. So we can use this for our take profit. And also we have our trade number 3 here. So you can see the trade number 3 is coming from this fair value gap here. So we have a fair value gap price just tapped into and a newly formed fair value gap here. So you can see it more clearly like this. You have a fair value gap here, price comes back to tap into it, and before then you can see a break of market structure here, and this one would have been our entry here. So at this spot we'll highlight from here this fair value gap to this low here. So we can just use the order block for a higher risk to reward ratio instead of just using the old fair value gap from here. So just use this, and as price come to tap into this area, you can see how price come to tap into this area multiple times, 1, 2, 3, and 4. So we just put it here for the first tap, a low position at this spot here, and our stop loss would be below this previous low that created for us that fair value gap. And you can use the same risk, and you can use the same take profits as the previous trade. So this is giving us a 5.89 for our trade number 3, and this is giving us 6.33 for our trade number 2. So that would have been a very good bullish trade. The next one is our trade number 4, and you can see if you had kept your trade all along, you can see that it's actually reached up to this point. But for the greedy ones, actually, or the ones that actually have their conviction that the trades will actually reach this area, giving us a 9.43 for this trade number 3 and 9.54 for our trade number 2. The next trade happened to also be a bullish trade, which is our trade number 4, and you can see this price tapping into this fair value gap here. The next thing is a break of market structure here and a fair value gap here. You have a fair value gap here. So this fair value gap would indicate that price might likely tap into this area and go to the upside. So we have our order block being highlighted here. So we just put our long position like so, put it at this order block for a higher risk to reward ratio, and our stop loss would be before or below this previous low that gave us our fair value gap, and our previous high that we can use for our take profit would be around here, giving us a 2.65 risk to reward ratio. As you can see, just around that area there. So that was our trade number 4. And the next one is our trade number 5. So this happened to be a bullish trade also. We have a trade number 5 here. First of all, there's a fair value gap here. This is our fair value gap here. So price comes to tap into this area and bounces up from it because of this power, because of the power of this fair value gap here. No matter how small it is, we can see the momentum, we can see the push that price is actually going past this previous fair value gap here. This would have stopped price from moving and go to the downside, but because price already tapped into this area past this high also, then this previous fair value gap has been invalidated. So we have now a push to the upside, and we also have a newly formed fair value gap here, and this is giving us a beautiful possible trade. So we have a setup like so, and we put our bullish position, long position here at this fair value gap, and our stop loss would be at the previous low that created for us that fair value gap. So all the way to the top here is giving us 2.36 risk to reward ratio for this previous high here, and this is giving us a 3.17 risk to reward ratio. So that was the trade number 5. The next trade is our trade number 6, and this happened to be our first bearish trade. So our trade number 6 tapped from a fair value gap here. After tapping this fair value gap, price comes to the downside, created for us a break of market structure, and prior to that we have a fair value gap here. So this fair value gap will be used for our entry. So at this fair value gap, we can align the whole fair value gap to the high. So now we have a tap into that fair value gap, giving us a short position here, a bearish position here, and our stop loss will be above this previous high. Our take profits can be at the previous low here. So this would be our take profit, and this is giving us a good 3.48 risk to reward ratio for our trade number 6. The next trade we have is our trade number 7, and also our trade number 7 happened to be a bearish trade. Same kind of trade. We have a tap into this fair value gap here, price rallied to the downside, created for us a break of market structure here, and we have a break of this market structure here. So then we have a fair value gap, and at this fair value gap you can see that price comes back to this area and goes past it, comes back to this area and bounces off from it. Before then, we will be ready that price will tap into it, so we'll put our position here, plot position like so at this spot, at this fair value gap here, and expect price to come tap into it. And we have a stop loss here at the previous high that created for us that bearish fair value gap. So as price comes to tap into it, then we have to set our take profit. Now your TP can be anywhere from 1, 2, 3 or 4, so you can set your TP here. This is a good TP, a less risky one, in fact the most careful one. So we have a 2.57 risk to reward ratio, but if your TP is at this spot here, you have a higher risk reward ratio, giving you a 3.37 risk reward ratio. And at this spot here, you have 4.12 risk reward ratio. See how price went all the way to this area to take out this previous low, and this is giving you a 4.72 risk to reward ratio. And that was our trade number 7. That happened to be our last but not the least trade. So moving on, we would expect price to respect any given fair value gap that we see that price had actually respected before. So any kind of fair value gap you see on our 3-minute time frame, you can see that it's quite helpful to analyze your fair value gap, to analyze what kind of fair value gap is actually being respected on the following week. So fair value gap like this, we need to highlight them. Okay, that price might tap into it and give us a newly formed fair value gap, and that's what we use for our entry. Just like this fair value gap here, you can see a fair value gap here. See price tapped into this fair value gap. So what we need to look for is if price has given us a break of market structure. This doesn't look like a good break of market structure, but still yet price actually respected this newly formed fair value gap and pushed the upside. So anytime you see something like this, just know it's not really an A setup, because the fair value gap has been created, yes, but we don't have a clear break of market structure here. So that is that. And moving on, meet you guys on our next episode on the trades missed last week. Share, subscribe, and like. Peace.